Welcome to our session here with Eurex Executive Board members Matthias Graulich and Randolf Roth. We are here to look at an eventful year 2020, but more importantly, to look into the future and to shed light on major industry trends. So thank you for being here. Welcome, Matthias. Welcome, Randolf.
Thank you.
Thank you.
Let's first of all look at 2020 and what that year actually meant for equities, because it was a main success for you, right?
Yes, but if you look at 2020, I think the thing which we can most proud of, and when I say we, I mean the entire industry, not just the exchange, the clearinghouse, but also all the market participants, the asset manager and so on, is how we managed the corona situation. It was a time when our world turned upside down, not just professionally, but also personally, and we managed together the high macroeconomic uncertainty, the resulting volatility, and the high volume. Looking specifically on equities, we grew 12%. One major item of this had been our product innovation, naming, for example, total return futures as well as ESG. And another item had been the MSCI family, where we continue to be the exchange with the biggest open interest pool and the most comprehensive product offering.
Matthias, you also won quite a very attractive award for the industry, the Clearinghouse of the Year. Why did you get this award?
Well, first of all, a big thank you to our clients and customers for voting for us. That ultimately got us that award. And I believe it's a result of working together with them over the last couple of years in trust and strong partnership. I think two items stand out. One is linked to what Randolf said on the Corona side is Prisma. Prisma unfolded its value during that period of market stress, and that was obviously highly valued by our clients. And what was highly valued was the transparency, the predictability, and the robustness of the system. The second item, which is worth mentioning, is our general partnership approach, that we listen and continuously improve. And in particular, our partnership program, where we developed on the Euro clearing side over this 3-year period, a market share of 20% and a comparable liquidity and price picture.
One of the main drivers of change are uncleared margin rules and pressure on balance sheets. So how does this impact you?
The uncleared margin rule is about having appropriate capital for the counterparty risk. And this is greatly benefiting the exchange and the clearinghouse world. And accordingly, it will foster further this trend for what we call futurization of OTC business. And Eurex has been a first mover in this space, already starting in 2008 with the dividend products, which have been completely traded outside the exchange world and now almost completely traded in the exchange world. And the latest example are the total return futures, where we expand our product portfolio based on the success last year with listing 3 new products on the 29th of March, one on the FTSE 100, one on the Stocks Banks 600, and one on the Stocks Dividend Select.
Is there anything to add from your perspective, Matthias?
Yeah, just to echo what Randolph said, it will create a level playing field between the bilateral world and the cleared world. And ultimately, I believe it will result in bringing more clients and more products into the cleared and exchange-traded world. On the balance sheet side, there was big pressure on banks' balance sheet. It had a bit relaxed due to all the measures taken by the central banks and the regulators recently. But this pressure, I think, will come back. And here, as a CCP, we provide solutions. Multilateral netting is key. And if we look, for example, into the repo world, where we see a clear trend of end clients moving into the cleared world, the hedge funds, asset managers, pension funds, then this is a very positive development where we can add value, giving better terms to the buy side and getting less capital balance sheet requirements to the dealer banks.
Yeah. ESG is a very interesting and very big industry trend. So how are you positioned in that market?
Eurex is the #1 exchange in terms of open interest and volume. So we have been fairly successful. And we have started 2 years ago. We continued to roll out also last year with, for example, the DAX ESG products, Eurostoxx ESG product, but also MSCI ESG products. And we will continue this this year. But also to put it into perspective, I mean, in terms of ESG usage and derivatives, it's still in early stage. So we'll see how this will develop.
But ESG is increasingly not only a topic for equities, but also for the fixed income world. So what are you doing at Eurex in that respect?
Yeah, as Randolf said, I mean, ESG on the fixed income side is probably even more in its infancies than on the equity side. And what it at the end needs in order to grow and develop is a full ecosystem. And we see that issuance of bonds is increasing. We see governments, the EU issues next generation EU bonds, the German government issues green bonds, the Italians do the same. So we see that this is growing also on the corporate side. What it needs is also derivatives and securities finance products. And that is where we can contribute as Eurex. And that is a focus for us to, for example, bring eventually futures on the next generation EU bonds. We have set up green bond baskets to do repo transactions. So in order to complete that ecosystem and set the basis for this ESG environment to grow further, that is where we can contribute.
But you're also impacted by macro trends and central banking policy, not trends, but policy decisions. So what are the main themes for you in that context? How it is driving your business?
Well, I think there are a number of topics, and just to pick on two, one, the continuously negative interest rate environment, and the other, the IBOR reform. And looking at the rate environment, people are looking for yield. And that requires them to take more credit risk, that requires them to look more long-term. And that is at the end what we see also on our side. We see, for example, the activity in 30-year Buchsel futures is significantly increasing. We see that the activity in Italian government bond futures is significantly increasing. If we look at the IBOR reform, it is less radical in Europe than it is in the US. Nevertheless, the IBOR reform, so switching from EONIA to Euro STR, means you need to price your derivatives in a different way, so that is a change. And there are also new product opportunities attached to it. For example, listing derivatives futures on this new benchmark rate, Euro STR. That is what we have on our radar for 2021, and we look forward with market participants to roll out these new products.
So Randolf, it seems that's all about liquidity. So what are you doing in your segment about that?
We invest in the market structure. To just give you two examples, one is the passive liquidity protection, we call PLP, which enables liquidity provider to focus on serving the end client, to the asset managers, providing liquidity to them rather than competition with among the super fastest. And it was controversial when we introduced it 2 years ago, but now we see the effects and we see what we were hoping for. So we see a much more displayed liquidity in the public order book at the fingertips for the asset manager to use. That's one example. The other example is Eurex and Light, where we say, look, the order book is great and we will foster this, but there are orders which are too large or too complex to be addressed in the transparent order book. And for that, we have built Enlight as a tool where you can find counterparts and trade with them in an electronic fashion and in an STP fashion, also for those large orders.
So Matthias, let's talk also about Brexit, because clearly that's super important for your industry. So what is the impact from Brexit on your business?
Let me take, first of all, a holistic perspective from a regulatory and political side of things. The EU has clearly articulated that they want to build an ecosystem within the EU which kind of reduces the dependency on UK and London as a financial center. And what we have seen as a result is that passporting disappeared, so you cannot serve out of the UK EU clients anymore, which led to the fact that many US, Asian, and UK firms set up entities within the EU to continue service the EU clients. We at Eurex are really strong believers and supporters of this broad European idea, and we want to support building this EU financial market ecosystem via market-driven initiatives. And what we have done 3 years ago, we set up a partnership program where we developed together with these partners a liquid alternative within the EU to clear euro swaps. And we have done that quite successfully. We have created the same liquidity picture as you will find in London, and we have achieved a 20% market share. And I think that is a very important contribution in the overall, in the grand scheme of things, to reduce the dependency on third country financial markets and build a true European financial market ecosystem.
Randolf, what are your observations in that respect when it comes to Brexit and your business segment?
Yeah, I mean, before Brexit, London and the UK had been our #1 location. The biggest market share, most participants we had from there. So it took us the better part of 2 years to work closely with the market participants to transform this business into the EU. And we're very grateful that we succeeded, because we could not have done this without our market participants. One of the consequences of this has been that we had, for example, last year, a record number of client onboardings, never seen before, 200 clients. There were 2 drivers. One was the Brexit, and the other one was what Matthias mentioned, the major success on the clearing partnership program.
Thank you, Randolf. Thank you, Matthias. Thank you very much for joining our session. I wish you a very interesting conference.